Here's some main differences between a mortgage in the US and the mortgage in Canada. So in the US, they have 30-year terms based upon the amortization. So it's almost like a 30-year term on a 30-year amortization. Away you go. You have one rate that you only have to worry about, and the rest of it's taken care of. That's in stark contrast to Canada, where the most popular rate is a 5-year fixed or a 5-year variable. Everything's on 5 years. And usually the amortization is 25 years, maybe 30 years. And so you chop that up to 5 or 6 different terms throughout that longevity of the amortization. So what happens is that there's pros and cons with that, right? For the US, you can lock in at, 6%, 7% as of like last year and 2 years ago when rates went sky high. Then you're stuck with that rate for 30 years unless you refinance to another lender at a lower rate, by which there's still a penalty to do that. Versus in Canada, you have renewals, right? 5-year renewals where you always have the chance to get that lower rate or get a rate that's more accommodated to the economic environment. Now, 3-4 years ago, if you're in the US and you got a mortgage at the bottom of the barrel rates, you're laughing, right? That's why in the US, the housing market's so different, because folks are just staying where they are. They have a great rate, their mortgages are low, and they don't see the reason to stir that up. Why would you want to set up a new mortgage at another property at double, if not triple the rate? It doesn't really financially make sense. So that's why in the US, it's a lot more difficult to stimulate the housing market than it is in Canada, because everyone's renewing their mortgages, everyone's buying and selling more often than they do in the US. So as a result, we're more sensitive to changes economically when it comes to that type of affair. That's why in Canada, real estate's a lot more of a massive industry versus the US.